Hello, everyone, and welcome to XM Live. My name is Gil Paz. We are in the beginning room, and I welcome also all the viewers here at YouTube. What can you expect from this session? First and foremost, what is XM Live? XM Live is a service where we are on 3 different channels, trading 8 hours every single day. We are about 15 experts, 15 professional traders. You can watch us how we trade, how we make decisions, what mistakes we did in the past, and it should help you become faster a successful trader. That's at least our goal. Now, in this session, I will talk about the COT report. The COT report is a report that is published once every week by the CFTC, that's the US regulation, and it shows me how professionals, investors are positioned in the market, also in Forex markets, also in indices, also in commodities. And this is probably the most important tool that I use for my trading strategy. So we have here 3 different sections of this hour. In the first section, the first 10-15 minutes, I will explain the COT report. I will explain also a little bit my trading strategy, but mostly I will explain the COT report. In the second part, we will look at the COT report itself, at the newest one that just got out this weekend, and we will see what kind of signals it gives. And in the third part, we will try to open a couple of live trades. So it becomes practical and you see how I implement everything. In any case, in any situation, you are invited also to ask me questions. I will try to answer everything. And with no further ado, let's start the COT report. So when I analyze markets on 3 different layers, like an onion that has, those layers. So there is the outer layer, the middle layer, and the inner circle. I go from the big picture to the small picture. The big picture for me is fundamental analysis. Maybe here I should also mention what I'm trading. I am trading Forex, mostly. I trade Forex, indices, and commodities. This is my core market. So this is not about stock trading. This is about Forex, indices, and commodities. So in Forex, fundamentals are quite important. By the way, also in commodities, you can see the oil price is going up because of the war with the US and Iran and Israel. And so obviously this is affecting oil prices. It's also affecting other commodities. And therefore, yeah, fundamentals matters. What is important is that fundamentals matters always in the long run, never in the short run. So this is not really for trading, but it's for understanding where we are in the markets. So the fundamental analysis, as I see it at the moment, obviously you probably heard from yesterday also that there were a lot of news mixing signals coming out. But obviously we had a war. By the way, there is another war going on, Russia, Ukraine, that is still in here. The market don't care about it anymore. And I think as long as US-Iran war continues also, the market maybe will also not care anymore about this war. But that's another story. At the moment, we have the Iran-US war and the Strait of Hormuz is closed and the oil price, therefore, is going up. There is ceasefire at the moment. There are negotiations. There are threats and there are breaking of ceasefires. That's the situation that we have at the moment. Everything in the Middle East, even if they're shooting, it's part of the negotiation. But as long as those negotiation goes, as long as the Strait of Hormuz will be closed, as more the oil will become a problem. That's the big picture. Now, look, the interesting thing is by energy prices going up, obviously inflation is going up. And monetary wise, and this is very important, in June, we will have interest rate decision from every big central bank. And some of the central banks, I think, will decide to raise interest rates, and other central bank will decide to stay on the sideline and not raise interest rates. And to be very open with you, I think, for example, if the ECB would raise interest rate, it would be a huge mistake. Why? Yes, inflation is going up, but you are raising interest rates in order to stop inflation going up, because when you have inflation, because the economy is running too hot and people get too much more salary and everything goes up because of that, that's what you have to stop with interest rates. But higher energy prices, you can raise interest rate from 2.1% to 50%. It will not change that oil price will be high. There's no change in it. So why should they raise it? I don't understand it. But we will see that, and we will see big moves probably in currency pairs. At the moment, currencies are not that interesting. We see many currencies in sideways markets. Euro dollar is in a 1 year sideways market. British pound US dollar, 1 year in a sideways market. But I think this month could change it. Now, this is the big picture. I am not trading based on the big picture, at least most of the time not. Why? Because it's long term. Even if I'm say the Japanese yen should get weaker, that doesn't mean that it can get stronger the next 2 weeks. Okay, in the long run, maybe I'm right, but what is long run? I need to get in at a certain point. I have to put my stop loss, risk management, everything. The timing has to be right as well. But the big picture helps me to orientate myself, right? Like if I make a trip, a trek through the whole world, it's important where you are in order to understand your surroundings, your culture you are in, and everything. This is the fundamental picture. It's an orientation point where you are in the whole story. Now, the second layer of my analysis is the sentimental analysis, and I make this through the COT report. What is sentimental analysis? Sentimental analysis means I am not looking at the fundamentals. I'm not looking what is happening in the economy. I'm looking at the market participants that are moving the economy, right? Because listen, we could have a very good economy, right? Everything is good. GDP is growing 3-4% per year. Fantastic. But if people are worried that this will change and they will lose their job, they will not spend money. And when they stop spend money, then the economy will go down because they're not spending anymore. So the sentimental, the perception, what individuals are doing, the sentiment is extremely important. Now, how can we measure that? Look, one way of measuring is you ask your friends, and if everybody is long on gold, then you know, okay, that trade probably is done. Everybody is already long in gold, so maybe I should look for a short. That's one way, but it's not very, let's say, scientific, because maybe just it's your friends that are bullish on gold. If you would ask everybody in the world, maybe they would be rather bearish. So the feeling is not good enough. So I'm using the COT report because in the COT report, I can see how institutionals position themselves. And that's the sentiment, right? So it could be that, S&P 500 is going up, but institutionals are rather shorting S&P 500. That tells me something, right? And so we will look at this COT report a little bit more in detail. The problem with the COT report is also it comes out only once every week, and it's on Friday night. We don't get it daily. and therefore the timing is also a problem. So even if I get a strong signal in the COT report, it doesn't mean that I immediately on Monday morning can enter the market and make money. Often it takes 2-3 weeks until we see the price movement that the signal I got already in the COT report. And so it's a good indicator, but it's not a good timing tool. And therefore, I go into the third level of my analysis, and this is technical analysis. I look at the chart, and the chart helps me to see where there is momentum. It helps me to see if there is a turnaround somewhere. And so with the free trades, with the free layers together, I get the big picture. I get interesting trading ideas. By the way, I want to write this down. Where is my pen tool? Here. So this is big picture. Big picture. This gives me an idea of what I want to trade and in which direction. And this helps me when to trade. And this is how I look at this together. So I see already viewers here from YouTube. Hi to all of you. Great to have you here. I just want to mention again that if you click on the link below in the description, you can sign in a free membership. It will not cost you anything, and you will have live trading 8 hours on 3 different channels every single day. Okay, so I put the groundwork how my trading strategy works like. The CFTC is publishing the COT report. CFTC, there in the US, there are 2 regulatory bodies for financial markets. The SEC, it's one, the SEC is one, and this is responsible for assets in the United States and how they are regulated, and the CFTC for derivatives. So everything that has commodity or derivative like futures or options, they are regulated by the CFTC. And this CFTC is publishing every Friday evening, almost every Friday evening, the COT report. COT stands for commitment of traders. Okay, commitment of traders. And it tells me just how traders are positioned. You can go to this website and you can free download the data into Excel, and then you can analyze it. So when you analyze it after that, there are 3 different reports that are relevant for me. The first report is the old report. It's also called legacy report. This report, by the way, exists since the 60s, I think. So 60, we have data until 1986, if I'm not mistaken, to download for Excel. But this is called legacy report. The legacy report has 3 different trading groups and the open interest. The first trading group are non-reportables. Non-reportables are small speculators. They trade, but they don't have a lot of money. Look, the COT report is published because in the past, in the future markets, there were manipulation. So big institutions, they could push the price up and down in order to trick other market participants in one or other directions. And we don't want the regulations, they don't want that markets are manipulated. They want markets are, people make decision on if they want to buy gold or want to sell gold, and not if they want to trick somebody in. And so you want to avoid that. And so you have to tell actually the big clients, the big traders, you have to show us our positions. You have to show what you're doing. Now, the non-reportables, they're not big enough that they can move or manipulate the markets. So if you go all in long or short in gold, it will not move the gold price. You just don't have enough money. And therefore, you don't have to report. You don't have to show what you are doing. You can go long and short whenever you want. And this is because you are a non-reportable. And so there are small speculators. Now, what is unique on small speculators as a group? Within the group, they're very diverse. There are people that are long-term traders and short-term traders and scalpers, and from different places in the world, from Asia, from the US, from Europe, from South America, Africa, from everywhere.